God have mercy upon us. All right, so about the network, I don't know. Maybe my system just decided to misbehave. All right, so let's make progress. And I was trying to establish this fact that for a support or resistance to make sense to consider it to make a trading decision, price must bounce off that region at least twice. That is how sometimes also you can um, know how to now join a trend that is going back to the direction of the market. Now, this was the resistance where the market, this was the level rather, where the market found resistance to retrace before we then continue to move to the upside. So what can we observe about this region? Remember that any region where price gets to and price bounces off, that region is a support. But before we consider any region a support to buy, price must bounce off that region at least how many times? Twice. So that's the same law for trend line too. That for a trend line to hold, I'm sure you read that on the videos, that you must at least first connect 2 points that the trend line can connect. And then you do that with the assumption. It's an assumption, you can't be so sure that by the third time price will be coming there, price will bounce off or bounce down again. And by the fourth time price is also approaching that point, price will also bounce up or bounce down again. And as we can see, that is what we can see in this region. So apparently, price got there the first time, found a support here, came there the second time, found a support. So that becomes interesting. I can now postulate that, oh, the third time the markets will be coming here, I may look for buying opportunities. So what will I do? I can set my, pending order there that once the market gets here, it should fill me in. I put my stop loss some distance below that low. And where do I put my take profits? Ideally, my take profit should be somewhere around there. But there's what we call trading in line with the market direction. On the higher time frame, this is a bullish movement. So I know that maybe most likely the market may come higher than here. Of course, that doesn't mean I will hold my take profits till it gets there, but I'm just showing you something. So for now, we are just trying to talk about support and resistance, not how to pick a trade yet. So you can see how that makes sense to pick a buy. And if we say for a short sell too, price bounced off here the first time. The second time, price got there and came down. We can also assume that maybe the third time, price will get there and drops. Unfortunately, what did price do? Price got there and it what? And it dropped for a while. If you are also waiting for the fourth time and say, as price is approaching, who knows? Maybe. Well, as we can see, price did drop, but not immediately. If your stop loss was right above here, you can see price went to first take out your stop loss before going in the direction that you wish. This is why you hear people say things like, the market took me out and it started going in my direction. These are part of the game. That is why we have risk to reward, to ensure that every time the market is going in your direction, what you make is more than what you lose. So let me digress a bit into risk management to let you see that losses are part of this game, and that does not mean you will not be profitable. So I taught you how to identify risk to reward. So let us assume that for this trade, what I did was a 1:4 trade. Good. Meaning that on this trade, if I'm risking $5, I'll be making 5 times 4, which is 20. So this trade went my way, I've made $20. And then I took another trade, but this one ended in a loss. Remember, I've made $20 before, right? Yeah, I've lost $5. $20 minus $5, I still have $15. And imagine in this case now also, I now took another trade that ended as, let's say, 1:3. That is 5 times 3. That's 15. So this is 15 plus the 15 I have after this loss. That's $30. So I'm profitable overall. That is why risk to reward is very, very important. So we've talked about support and resistance. Imagine all at one spot. Does it make sense now? So support and resistance are zones that you can look at on the charts to postulate that, okay, since price has bounced this region off by the first time, this is another example right here. Remember, we said support and resistance are more of zones. It is not a specific price level. Price came here the first time, bounced off, came here the second time, bounced off a bit, and then came here the third time and still do what? Bounced off. So if for any reason you set your buy limit there, your stop loss somewhere around here, and maybe your take profits are this high, that's a 1:1 what? A 1:5. Easy, smooth. That's a support. Price bounced off the first, second. It is at that second bouncing that it should catch your interest, not the first. Because if price come here, bounces off the first time, bounces off the second time, good. This is an example of a situation where we would have had another pure loss. But whatever you lost here, you can see that you've made it back here, isn't it? Is that making sense? I believe it is, and I believe it should. So this first time alone is not enough, even though the second time price bounced off. Because, okay, take for example, let me look for a very good place. Okay, this is a point. You can see that price came here, right? And bounced off the first time, right? If you don't wait for the second time, imagine just setting your buy limits here and say you want to take a trade and put your stop loss right below. You will end up in a loss. Imagine another one over here too. You end up in a loss. So that first and second time of bouncing off is always very important. I hope we are making sense together. That's for a support, and the same thing also applies for a resistance. Now we have what we call dynamic support and resistance in the market, and that is what we call trend line, in the sense that trend line is a form of dynamic. This one that I just showed you is static, meaning that that support is on a spot, on an horizontal spot, either to the upside or to the downside. Let me show you example of a resistance. Awesome. So this is another example. Price came here the first time, second time. Now this is the third, right? And price came to close below it, isn't it? Cool. So what we are saying is that in this case, this resistance, although invincible, it is standing at a static point. But for trend line, now remember we said that trend line connects lows together in an uptrend, and then in a downtrend, we connect highs together. Great. So this is an example of a trend line supports. You can see that price came here the first time, bounced off. That's a support. Price came here the second time, bounced off. So the law of trend line, just like this one, states that the third time that price will come there, we can also postulate that price will do what? Bounce up again. This is what we now call dynamic. Dynamic means that it is not staying on the spot like this one. So this is called static support or resistance. And then trend line is called dynamic support or resistance, static. And then why a trend line is called dynamic support or resistance. Is that making sense to us? Dynamic in the sense that it is moving. It is not standing on the spot. Don't mind me. I hope that makes sense to us. So trend line actually is also a form of support and resistance, but its zone is static. Its zone is not standing on a spot. So let's say you've made use of this opportunity to pick another sell trade here. Mind you, we are selling in direction of the market. This is a downtrending market until the market closed above and we moved to the upside, right? Good. So we've made profits here. Now we've seen another what? Another dynamic support. And what does the rule state again? Price has bounced off it the first time. Price has bounced off it the second time. So the third time we can postulate that when price comes around, price should do what? Price should bounce off it. So what do? You set your limit order, your low below this low, your take profit at this high. And what can we see? Profits. That's it. That's how we take advantage of technical analysis to trade. So this is another example of a resistance that the market created before the market eventually reversed. So markets came here the first, came down, second time, came down. Remember what I said, it is the third and fourth that wants to catch our interest. So you can postulate that maybe on the third time it is coming back, it will dump from there. So you set your limits, stop loss slightly above that high, and take profits here. This is another sweet 1:3. I hope that making sense. I hope we get the concept or the idea of support and resistance. So let us also look for a dynamic resistance for a trend line. So this is another one over here. Let's take all this off. So the thing about all these things is that you train your eyes to see them, right? You can say there's a form of trend line resistance here. For downtrend, you connect from the top. From uptrend, you connect from the bottom. And if you look at it very well, very, very well, you can see that the first time price came close, price jumped. Second time, price jumped. Third time, fourth, until market violated before coming down. So that's number one. Number two is that even beyond that, we can see another one over here again. You know, take a look at all of this. Let's just pause it here, right? Can you see that? So this is another one. So for a bearish movement, price came here the first time, second time, we connect it with the trend line and extend it to the future. We can only use this as an example because this has already happened. But if it has not happened, we just wait. And what are we waiting for? We are waiting to see that, okay, as price comes here the third time, we are postulating that price will hold again. So we set our sell limits and our take profit to somewhere around here. And can you see how everything keeps working and how it keeps making sense? That is the ideology behind support and resistance. So support is that point that price gets to and price finds support to go up. And resistance is that point that price gets to and price finds a reason to go back up. Just take note of what I've said and let's make progress. And then we say we have the example of static support and dynamic support. So static support is the kind of support that is on an horizontal line, while dynamic support is the one you can find on a trend line, either to the downside or to the upside. So how do you make sense of this to take a trade? Mostly in an uptrending market. Follow me. I want to take off all of this first. Okay. Network has started again. All right. Right. So this, for example, now is a downtrending market. All we do now is we come to the charts and see how we can connect strategic key points that are visible. Are we together? This is last week. All of this is last week. So this is a high I can see here. I then connect it to this next one. Oftentimes, you want to, for practice, you want to use highs or lows that you can see very well. So remember, this is a downtrending market. So how do I find an opportunity in a downtrending market? I'm showing us one of many ways. Are we together? Because let's make progress. I'm showing you one of many ways. So what do you do here? You say that, okay, price has bounced off this region the first time. Price has bounced off it the second time. There's every probability that if price should come and touch that line the third time, price may bounce off it. So while the market is here, what do? You set your limit here on the line and you wait for the market to do its thing. So where do I set my stop loss? People have different rules for setting stop loss. Some people use pip number. Some people use different reasons. But for me, I use the nearest high. So ideally, my stop loss will slightly be above this high, slightly above it. And then my TP at this low. As you can see, that's a 1:5. And you are done. And then you say, who knows? That trend line may still hold again. You extend it into the future. This is the future. Now, in this scenario, what do you see? It seemed as though the trend line was violated, according to what I know you must have read on baby pips. But it was violated, but the market came back below it again. But I didn't know it was going to be violated. So imagine I set my sell limits here while the market was here. Sell limits here. Ideally, my stop loss would be above here. And then I take profits well. Yeah. So let's just make it a 1:3. Does this make sense? So that is one of the ways you look for trading opportunity in a bearish market. This is on a 4-hour time frame. This is one that you can see. I'm telling you that even when you check here too now, can you see all the... So one of the things you want to do is just to keep practicing on the charts until your eyes can just see spots that you think are easily connecting. So this is a spot that we can tell that is easily connecting on the 4-hour, such that when you go to the, let's say, 1-hour time frame, it may make sense. Good. Can you see now? Does that make sense? Does this make sense? Yes, it does. So how would we have maximized this for a sell? Remember that there are times that we will take losses. So of course, my sell would have been on that point. Maybe my stop loss a bit above this high. You can see that the market came so close, but it did not take us out. And then I take profits here. This is something that still happened yesterday. Look at the time. See, Friday, January 10th. Is it making sense? Take note that I said that also this is one of the ways. So to learn the trend line strategy, one thing you just want to do is to come to the charts and practice. Keep practicing. There's what we call back tests. Sit on the charts and go as far back as your chart can take you. Are you with me? And just begin to look for those points and begin to connect them together. I can see one here already. So it is this attitude of backtesting. That is what we call it in the Forex industry. Backtesting is the act of you've learned a principle, but you are going back to test how it has worked in time past. So the fact that it worked in time past means that it will work in the future again. Is it making sense? This is trend line on a daily time frame. How many years ago? Many years ago. Because this is 2021. Can you see? Is it making sense? That price came there the first time, the second time lower high, third time lower high, we can postulate that the third time price will be coming there, price should drop. And what happened? Actually, price dropped. My entry here, stop loss slightly above this high, my take profits maybe here. Of course, this is a daily time frame. Do you know how many days this is? This is from January 13. When did it take profits? March. Of course, we won't do this, but this is to let you also understand that across every time frame, it works. Across every time frame, it works. So I've shown you the idea of support, dynamic support and resistance. So mostly, remember that we are trading in the direction of the trend, meaning that you only want to use this strategy also to trade along with the trend. So which is why for every dynamic trend line we draw to the bottom, you see that it only gave us selling signals. And all things being equal, every dynamic trend line we will draw to the top, it will only give us what? Buying signals. So we have this one right over here too. Does it make sense? This is a lower high, lower low. Market violated it by breaking structure, bounced off it the second time, and then the third time, and then the fourth, and up we went. Does that make sense to you? Let us see if this is another one here. So start with trend lines that are obvious. So as you can see, first, second, third. Price bought a little bit before coming down. So one of the questions you now want to ask yourself is that at what point does a trend line becomes no longer valid? Because you need to put this into consideration too. At what point does a support or resistance point, let me use that instead, becomes invalid anymore? So a support or resistance point becomes invalid when price closes above it or below it impulsively. Impulsively means with force. Is that making sense? Just follow me. Because we are saying that, let me look for a good example again. Okay, let's still use this one, yeah? Let's use this one. The fact is, one of the things I know you must have read on Baby Pips is that Baby Pips will say that the more a trend line or the more a support or resistance is being tested, the stronger it is. Actually, that may be true, but in the end, it is wrong. Because the honest truth is that no support or resistance will hold forever. Never. You will never find it. No support or resistance will hold forever. Never. So the question now becomes, at what point do I know if a trend line to the upside or to the downside is no longer valid? It is no longer valid when the market closes below it impulsively. So that's one of the ways to also know that the market has done what? The market has changed direction. So in such case, I know that you must have seen it on Baby Pips too. That is when you have what we say a support that is no longer serving as a support can become a resistance. And a resistance that no longer serves as a resistance can now become a support. Because the fact is, price has bounced here the first time, second time, right? Third. And you're even expecting that the fourth, and you can see even for the fourth, he bought a bit. He just didn't buy for long. But who knows? You were not here when he did this. You were not here when he did this. You were expecting that maybe the fifth time it will come again and then bounce. But this time around, market said, oh, no, I'm no longer bouncing. I want to move to the downside a bit. So how do you know when to not look for a trading opportunity to buy on that trend line? It is when the trend line is violated. And what do we mean by it is violated? The market closes impulsively below it. This is for a buy trend line. And then for a sell trend line, let's look for 1. Let's go back in time. Amazing. This is 1 year. In fact, this one did not even hold at all. We can see, okay, oh, let's see this. Oh, okay, amazing. Great. So first, second, third. It's still, and most times, you know that we've seen scenarios where the fourth one self worked. But look at this instance now. The fourth one failed to work. Markets closed above it impulsively. So that means that all things being equal, this trend line is no longer working as a resistance to give us a sell direction. So looking at it also, the market has broken structure here to the upside already. So what that means is that all I want to do is look for what? Is look for buying opportunities. Is that making sense? So it is in this context that we now have what Baby Pips said. This is me also now teaching you how to look for trade ideas. What Baby Pips said in the sense that a support that was acting as a support before, if it no longer serves as a support, it will also, no, not will, it could. That's the word. It could serve as a resistance. And a resistance that no longer serves as a resistance anymore, when violated, it could serve as a support. So that is why maybe when you now enter the market, you hear people say stuff like break of a trend line and retest, or break of a support and retest. So this is a typical example of it, guys. You know that this was a trend line that gave us a sell signal at this spot. So let's assume that you took a sell signal here and, you know, the market gave you some 1:3, and the market on coming back did not give you anything. Rather, it broke it. So what we are saying is that this thing, this resistance, since it has failed, can actually become a support. Most times, does it work out that way? Yes. But does it work out that way all the time? No. But we will not say because it does not work out that way all the time, we will not trade. No. That is what we do in trading. The thing in trading is that we trade what works out over time more. So the fact is that over time, when you go and watch, oftentimes when a support fails, it becomes a resistance. And oftentimes when a resistance fails, it becomes a support. And this is where I'll now teach you how to use a one-time support as a resistance in the case of following the trend. But don't let's get it confused. Let's just take it step by step. So this is a resistance. It has been broken, right? Now we are saying that since it has been broken, the market can now come back and find support there. And like we saw, what happened? The market found support. So, you know, we could set your buy there, your buy limit there, your stop loss below this low. As you can see, great profit. Is it making sense, guys? Take a look at this one also. It was a support before. Market broke it. What did you see that happened here? It became a resistance. So what could you have done? Maybe set your, entry there, your stop loss, maybe somewhere above here. You get 1:3, great profit. Is that making sense? And the same thing also applies with what? With a dynamic and with a static. This is a dynamic. The same thing also now applies to what? A dynamic resistance. And this time we will take it over a period of time. In fact, we'll take it across some level of board. What am I trying to say? I'll show you now. Now, when you look at this region, for example, you can see that price bounced off the first time, bounced off the second time, bounced off the third time, even bounced off the fourth time. This is not a smooth example enough. Let me look for a smoother one. Remember, I said that this is just one of the ways we take trades. So meaning that if this is one of the ways you want to practice it. If you don't see it, don't force it. Trading is not about trading all the time. Trading is about trading one or two times. But those one or two times should end in great profits for you. Okay. Um, so let us look at this region. This region right here. What can you observe there? You can observe that price came here the first time, bounced off. Came here the second time, bounced off. Came here the third time, bounced off. Came here the fourth time, bounced off. Even the fifth time, he reacted a bit. And the moment price broke below it, this is not smooth enough though. The market came back and still respected it. So having failed as a support, it became a resistance. I hope you're following me. Let me look for smoother examples. Ones that are we can say that, oh, this is a very, very perfect example. Okay, I think that's because we are sticking with GBP USD. Let's look for other assets. It's just that for me, I'm often used to trading just one asset here. Maximum three. All these ones where I put here, I know they trade them all. I just, check them out and see how they are doing. I don't trade them. If you go and check my trading history, what you mostly find there is GBP USD. So this is USD JPY, right? This is a particular example I want to show you that is giving us all these reasons to be looking for this. Oh, great, great. I found I found a perfect example. So this is a support region. Just like I showed us with the trend line scenario, right? So price came here the first time, or price was here the first time, it bounced off, was there the second time, bounced off. Price on coming third time. What would we have maybe anticipated? Another bounce off. But as we can see, price failed towards bounce off. So what can we expect on the third touch? We can expect that now that it has failed as a support, it may serve as a resistance to price. And what happened, guys? It did serve as a resistance, giving great profit. And in fact, it serves as a resistance for a greater number of times. Because now the markets came here the first time, second time, and even the third time to find resistance. And when you even still extend it into the future, we can see that the market still found resistance there again. Is that making sense to us? So let us wrap this up. How do you make sense in all of this to then make a trading decision? Remember what I taught you the first time, right? That when the market gets to any point and bounces down, that point is a resistance. It is just that to trade off a resistance, we need price to bounce off that region at least twice. But to now make a trading decision as the market is going sometimes in a trend, now I will show us something. You know that this is 2 hours, yeah? Great. And this is an uptrending market. The fact that this market sold a bit in downtrend makes this point, this high area, a resistance. Remember, what's a resistance? Any point that price got to and price violated. Any point that price got to and price dropped is a resistance. So in this case, the market has come and gone above it. So we can trust that this support will become a what? A resistance. That's what they call break of support and retest. So what do? I come here, set my limit order, maybe my stop loss below this candle, and of course my take profit here. And what can you see? This one moved well. Does this work all the time? No. But are there times that it works? Yes. This is another way that we take trade in the market. Because so take for example now, this is a tinier one. Market bounced off, bounced down from here. That makes this point a what? A resistance. The moment the market closed above that region and broke structure to the upside. So imagine you had a buy entry over here. Imagine, since it no longer serves as a resistance, we say it may serve as a support here. So market comes down, maybe your stop loss below here. You take profit somewhere here. You can see what the market did. The market gave you some 1 ratio 2.5. And that is that about that. I've shown you a lot that may be confusing. So how do we make everything make sense? Remember, first of all, we only follow the trend. Second of all, you want to then enter the charts. So meaning that once I enter the charts today, for example, let us assume that today is a trading day, right? And once I enter the charts, what's the first thing I'm meant to do? The first thing I'm actually meant to do is to identify my trend. That's my first responsibility as a trader, to identify my trend. And as a trader, what time frame do I say we go to identify our trend? The weekly, the daily, and the 4 hours. Not 1 hour, not 2 hours, 4 hours. That's the list. So meaning that on Sunday, I'll come to the weekly and look at this market. That's because the higher time frame always control the lower. And what can we say on this weekly time frame? We can see that currently the market is what? The market is in an uptrend. But at this region, it is currently not so clear. So what do? We scale down to the daily time frame. Great. And on the daily time frame, what can we see? We can see that we have this higher low, higher high, higher low, higher high. Did you see an example of what I was trying to show you that time? In this case, this is the higher low. We look at the closing price here. Can you see what happened? Can you see that price came below the higher low, but did not close below it? Am I making sense to you guys? So this is higher low, higher high, higher low, higher high. Now, from the look of things, on Friday, it seemed as though what the market came to do was to create the higher low. And then what that means is that going into next week, we should expect that maybe the market is going to create the higher high. So as a trader, how do I take advantage of it? The first thing is that I have identified my trend, isn't it? Having identified my trend, what do I want to do? I want to go to 4 hour again. Yes, overall, even though we can see all the zigzag, overall, the daily tells us that the higher time frame is doing is moving to the upside. Now, I now begin to look for levels of support that can support price going up. So this is one. You can see price bounced off the first, second. So I can just draw this into the future that, you know what, when price comes to this line the third time, who knows what may happen? Markets may give me reasons, may give us reasons to buy. So I set my sell limits on the trend line. My take profit slightly above this high, and then I wait. You can see how I'm using support in respect to the trend. So what that means is that you see all these many resistance, honestly, does not concern me. Because what concerns me is that the market is in an uptrend. Now, mind you, I'm also now seeing another form of trend line here. Can you see this? Which, who knows? Price has come here the first time, second time, third time, bounced off. The fourth time, the market went below it, but did not close below it. I'm sure you saw this maybe on Daily Pips. So meaning that going into next week also, this trend line may still hold. And in fact, as you can see on 1 hour, it looks as though it was going to hold before the market closed. And what that means is that you can see that the market has come above it, touched it, and is about to go back up. So that is to say, going into next week, if I was here on Friday, who knows, maybe a limit would have been here, stop loss slightly below here, and then take profits at that region. So I have two postulations. Which one we hold? Friends, nobody knows. That is why we practice risk management. If we were here for this third one now, we could have maximized it. Our buy limits right above it and right on the trend line. Our stop loss slightly below this low. And just do what? Wait for the market to do its thing. And as you can see, what did the markets do? The markets delivered. I hope I'm making sense to us, guys. So how do we wrap up this to make all the sense? Watch this again and again. Having watched this, swing into practical mode. How do you practice? First of all, by back testing. You go on your charts and look for different areas where markets bounced off a dynamic support. This is one here. I can easily see them now because I've spent years on the charts. Let's use this instead. Great. But for you as a beginner, what you want to do is to learn to connect obvious points. So obvious points like this. Can you see? Can you see how long it took even for this particular trend line to still play out? Obvious points like this. So price has bounced off it the first, second. You can see the first time was when? October 2024. The second time was what? Still October 2024. And then the third time was when? November 2024. This is because of how long this one took. Are you together? So your stop loss may be slightly below this low. And you see, that is cool, great profit. But even before that came to play, and you see that we have another trend line situation inside this place. Take a look at this one too now. Let's connect this obvious low to this obvious low and extend it into the future. Can you see? Or let's just, so this is first, second, can you see? Third, went, fourth, went a bit, fifth, went further. Is it making sense, guys? So one thing I want you to do now is back tests. First is you are still trying to formulate yourself as a trader. So go back in time. Keep looking for areas of significant highs. Remember that when we were on GU, we're only seeing sell example because G is in a downtrend. Now we've come to an asset that is in an uptrend too. You get it? So that is how you use dynamic support and resistance. Okay, so look at this scenario too, where USD JPY was selling for a short period of time. Can you see this? So 1, 2, 3, 4. If we bring it here, so 1, 2, 3. That's intentional. Are you seeing it, guys? Is it making sense? Sweet profit. It came to it the fourth time. Can you see? What's yes down? Sweet profits. That's trading for you guys. So for me to be able to analyze the charts very fast, you don't have to stress yourself with when will you be able to do that? It's a process. It's just like playing the keyboard. If there's anybody watching this thing that plays a musical instrument, you were watching your master and you was like, no. See as this person they play this thing. When me self go fit play am. Whereas for me, I went to learn keyboard and I ran away. So this is it about support and resistance, guys. And I was just trying to show us how we can then use in an uptrend to how to use a support to become resistance in a trade. But most of all these assets are very, very choppy. So one of the things I would show you about a currently trending market is that you see when you are following the market as it is delivering, follow me. I want to show you another powerful thing. Now take this region for example. The market actually created a lower high here. But let me look for one that is very obvious. Great. So this is a lower high. There's a support here and there's a resistance here. Now why is it a resistance? Market got there and came down. Now we can postulate that since the market is in an uptrend, can you see what happened? That the markets can come back to that same resistance. This time around, markets bounced that place off down just once. Yes, it did happen like that. So these are one of the ways to also generate signals in the markets. And what can you see? You can see that the market did what? Came to that point, but, and what do we have? Up we went to where? To the upside until the market came further down. I hope we are together. I hope that is making sense. I'm trying to see if I could have any opportunities, but this USDJPY is looking like an asset that doesn't respect that theory a lot. So let's check for GBP, JPY. Okay, see, let me make the lesson easy. What I'm just trying to say is, this is an uptrending market, right? Good. And what I just taught you about the law of support is that, you see, this high here, where markets retraced from, the fact that markets got to that point and could not go further means that there is a resistance at that point. Trust me. So what I'm now teaching you also is that in trading, we can see scenarios that same point now, once the market expands and goes above it, this same resistance, after being broken, can actually become a support point for price to continue the trend. Does this happen all the time? No, there's nothing that happens all the time in the charts. We only have what happens most of the time. Am I making sense? So this is a short example of a one-time resistance becoming a support to join the move to the direction of the market. Can you see that now I've shown you two ways to find a trade in a trending market? Number one is with what? With dynamic supports, which is the trend line. And now this is me showing you another one. And one of the things that baby peeps will now teach you, which I would also still show to you, is that it now makes sense when two supports or two confluences align together. So let me look for an example that I can show us on the chart. And the same thing applies to a selling market. That the market has created a low, retraced to give us the lower high, lower low. And we are saying this is a support that pushed price up. That the market in retracing to form the lower high, the market can actually find a resistance here to continue to the downside. You'll find this kind of a thing almost very often on GBP USD. Let's go and check. Are you seeing what we are saying? Look at this region. Remember, support and resistance is a zone. Does that make sense now? The market has been creating series of lower highs and lower lows. Is that making sense? So that we can postulate that this region that supported price to go up, since the market has now broken it and given us a lower low, the market in its retracement can come and find a resistance there to go further. Market has created another one. Remember that I had a limit here. Good. That the market can also find resistance in this region to go further down. What is this postulating? Look at this point also. And you see that even slightly before the market closed, the market found resistance at this region too. Because when you look at it, it supported price once, twice, even a little bit thrice. And when markets broke below it, what happened? Market found support and market found resistance over there to do what? To move to the downside. Is that making sense to us, guys? Good. So I've shown us two ways to join the trade of a moving trend. Number one is by using the trend line. And now number two is by joining a one-time support that can turn resistance. So take a look at this very beautiful scenario up here too. So this scenario of a one-time support, you want to always use it with the immediate market. What I mean by that is that look at this example now. The market's created a low here, a higher low, higher high, and then the market broke structure because the market did not respect any of those lows again. What can you then observe? Remember that I said support and resistance is a region, not a particular line. What do you see? Market came there. It was initially a support, found resistance, and went down. This place also now, we can say that the market found support somewhere around this region and this region. So we can just take that as a zone. What happens? The market came there and dumped again. So as you can see, I've shown you two ways now to join a trend that is moving, either to the upside or to the downside. Look at this area too now. Can you see that the market found resistance here, came down before breaking it back up, aligning with that particular example that I showed you, right? That the market can then come back to this point, find support, and continue back up. Can you see that that's the same exact thing that happened right here? So with my buy limit there, my stop loss below this low, I might take profits, at this high. That's a cool 1:2.9. Is all this making sense to us, guys? I believe that it is. In fact, even today, I wanted to take a trade before daybreak, but I was waiting for confirmation. So which is now the next thing I'll be teaching us in the next video, how to now wait for confirmation. Meaning that, yes, from the look of things, some supports held, some supports did not hold, some resistance held, and some resistance no longer held. So how do I know a support that I can actually still buy from? How do I know a resistance that I can actually still sell from? And for a resistance that became broken, how can I know if I can still use it for support? And for a resistance that became broken, no. For a resistance that became broken, how can I know if I can use it for support on the retest? And for a support that became broken, how can I know if I can use it for resistance on the retest? Now, those are the things I will be showing to us in the next batch of video. But for now, before you move to the next batch, one of the things you want to do is, maybe this is even an assignment here. So go into your charts, mark out places where you can see that the markets reacted off a trend line, at least on the first touch, second touch, and then third touch. And then you look for also dynamic trend line where you saw that price reacted on the first touch, second touch, and also third touch. I believe that makes sense. So that is the way you keep practicing until you are now used to identifying dynamic supports in the direction of the trend and static supports in the direction of the trend, and also how to use a resistance or support that became broken for joining the trend immediately. I believe this is making sense to us, guys. If we have any questions, we can ask so that we can make progress. So that will be all for this session, guys. Cheers and see you on the other side.